Well, I think we can start. Good morning, everyone, and welcome to FirstWave Cloud Technologies second quarter FY22 update. My name's John Grant, and I'm FirstWave's chair and was interim CEO during Q2. I'm joined this morning by Ian Bartram, FirstWave CFO and Company Secretary, and the company's new Managing Director and CEO, Danny Ma, who joined us in January following our acquisition of Opman Tech. Looking at the agenda for this morning, I'll talk about the highlights for Q2 before Ian talks in more detail about the company's financial performance for the quarter and the status of the transaction to acquire Opman Tech, after which Danny will provide an update on Opman Tech's Q2 performance and his early observations and priorities for the FirstWave post-acquisition. Shareholders will recall I reported at the FY21 Q4 update on the 27th of July that there was friction in FirstWave's product for both the service provider and end user, preventing them from adopting at scale, and that as a priority we had to enhance the product to remove this friction. On the 27th of October, we launched the Sci-Precision Platform, delivering enhancements primarily in the first instance for our service provider partners to enable them to deliver offerings for their partners and end user customers more easily and quickly, and also with enhanced levels of automation integration into their internal transaction processing systems. We're now focused on delivering Sci-Precision's frictionless email and mobile reporting capabilities to make adoption a simple one-step process and to give second-to-second safety status for our partners and customers by the end of Q3. To be absolutely clear, shareholders should not think that the launch of Sci-Precision frictionless email and mobile reporting will generate an immediate and dramatic increase in revenue in Q4. We'll still need to work with our partners to build their offer to their partners and end customers, and this will take a bit of time. But we have a much more compelling offer, and based on early indications from key partners and our assessment of the benefit to the end user, we believe we will see Sci-Precision revenue scaling seriously in FY23. Ian will provide more detail on the company's financial performance for the quarter, but in summary, the activity surrounding the acquisition transaction, unsurprisingly, absorbed much of the organisation's capacity, and this impacted on day-to-day outcomes. As reported in our Q2 Appendix 4C, total revenue was up 2% quarter on quarter. Annualised revenue was in line with Q1, with domestic up and international down quarter on quarter. Operating expenses were down, and CapEx for software R&D was consistent with Q1. Importantly, the acquisition of Opman Tech and the associated capital raise completed successfully early in the Q3 was no mean effort on the part of both the FirstWave and Opman Tech teams. And I also speak to the advisors as well. It was a huge effort to get this transaction done in the time that we did. It also gained 100% support from Opman Tech shareholders, and that demonstrates full support for the transaction rationale from their point of view. In January, you'll also have seen ASX notices on the appointment of Danny as CEO and Managing Director and Ray Kiley as a non-executive director. We are moving as quickly as we can to combine the businesses, and Danny will provide more detail. Let me now hand over to Ian to talk to Q2 financial performance and the status of the acquisition. Thanks, Ian.
Thanks, John. As noted in the highlights, the total revenue recognised in Q2 is up 2% on Q1 at 1.77 million. However, the main metric we present, being annualised recurring revenue, was unchanged from Q1 to Q2 at 6.95 million. Of this, domestic annualised recurring revenue was up 4% to 6.26 million, and international revenue was down 23% to 0.69 million. As noted in our activity statement and Appendix 4C, the decline in international revenues resulted from there being no significant new international sales and some churn, including the return of a 5,000 seat email licence held by DWS as marketing inventory. Significant improvement in the FCT international revenues is not anticipated until the Telem contract is restarted, and when the frictionless email and mobile reporting project due for completion at the end of March is rolled out. The expense savings for the quarter have come through headcount reductions. Having removed almost 200,000 in monthly costs in Q1, headcount was reduced further in Q2 with another 9 people leaving the business at a combined monthly saving of approximately 125,000 in base salaries. There have been a couple of new junior hires to rebalance the teams. However, total staff expenses in Q2 were 725,000 lower than Q1, and annualized reductions over the 2 quarters amounted to almost 4 million. Even though ongoing costs have been reduced by more than 300,000 a month from the start of the financial year, one-off payments for accrued leave, other redundancy costs, bad debt write-offs, and 500,000 in transaction costs for the Opman Tech acquisition temporarily pushed the actual Q2 costs higher. A continued focus on collections saw another quarter of over 2 million collected from customers, which is double the 1 million quarterly average in FY21. We are making good progress towards our target for $500,000 a month cash burn by the 30th of June, and in turn, tracking to cash flow break even with our existing capital. The main focus, though, in Q2 was the Opman Tech acquisition and associated capital raise. As John said, the acquisition received 100% support from the Opman Tech shareholders. This had the effect of removing the need to compulsorily acquire outstanding shares, which would have delayed completion considerably, and confirms Opman Tech shareholders' view as to the strength of the rationale for the acquisition. If you sum the share issues on the slide, you can see just over 890 million shares have been issued to shareholders, and the gross amount of 14 million received from the capital raise. Again, our sincere thanks go to the shareholders who participated. As you will have seen from the Appendix 4C, the cash balance at the 31st of December was 13.34 million. This was before most of the transaction costs. The cash balance at the end of January, the 31st of Jan, when combining the two businesses, is 13.68 million. And this comes after all but $500,000 of the transaction costs. It is also before the R&D grants for both companies are lodged, which will result in approximately another 1.5 million in available working capital. It is also noted that the transaction costs were all in line with budget. As John said, Ray Kiley has been appointed as a non-exec director and attended his first meeting on the 27th of January. And Danny was appointed as CEO on the 10th of January and as an executive director on the 27th of January. So to summarize, during Q2, revenue was flat, costs were significantly down, the business is now fully funded following the successful $14 million capital raise, and the acquisition of Opman Tech was successfully completed at the start of Q3, with the integration now underway. Let me hand over to FirstWave's new MD and CEO, Danny Mayer.
Okay, thanks, Ian, and hi everyone. It's great to be with you all on my first quarterly update. I'll touch on the final quarter of Opman Tech as a standalone company. Obviously, this has no impact on FirstWave's Q2 results, but I understand it will be of interest to shareholders given the acquisition of Opman Tech was completed in January. In summary, Opman Tech had a strong quarter, and in particular, December. And we've finished December with annual recurring revenues of $3.75 million Australian. Like any business with recurring revenues, renewals of those revenues are very important. And Opman Tech was pleased to renew major clients such as Telmex and Claro Dominican Republic. Importantly, for the merged business, I'll note that there were 5 new contracts that were signed in December, which actually commenced in Q3, and that's going to add more than $500,000 of annual recurring revenue to FirstWave's Q3 results. So I'm still quite new in the hot seat as CEO, 4 weeks in total, but I'd like to give you some initial observations. I came in as CEO together with a whole company, together with Opman Tech, after a fairly intense period of due diligence. So it's not like a regular CEO joining. I feel like through the due diligence, I came in with my eyes very open, and I guess I could say that like any due diligence, through the due diligence, I was looking for problems and found some. And I expected to find a bunch more when I joined as CEO, like any new CEO would. But I did join very upbeat. And since joining, I've only become even more upbeat. And generally what I'm finding is that things were quite in line with what we discovered in due diligence, and I'm finding more positives than I was expecting. And I'll talk a little bit more about that later, but each day I've been here, I'm more and more excited, and I keep uncovering little nuggets of gold, I guess I'd say. The transformative nature of the transaction, which we talked about prior to it completing, is evident to me as the CEO in the role. We've already got diversified international revenues, and that's creating the ability to make lots of different decisions. We've got new products from Opmantec with 100% owned IP with new revenue streams. Telstra is an interesting account, and it can be given an increased focus now as a key account. And if we think about what FirstWave had to do previously and what previously executives had to drive at, it was about diversifying international revenues and effectively diversifying revenues away from Telstra because we were too reliant on one account. That's completely changed through this acquisition, and we're now able to look at Telstra as a key account and put some more resources into it and treat it like a key account and get some growth happening there. The cost synergies are already being realised, with overall expenses reduced by over $300,000 per month, and cross-selling has commenced. It's going to take a while for cross-selling to produce revenues, but over this next quarter, the cross-selling activities are going to give us a lot of information to give us insight into what we expect that cross-selling activity to produce. On the next slide. So I wanted to outline some near-term priorities just in 3 areas. The first, and a couple of these areas are going to be quite obvious, right? The first is that the company needs to spend less. There's already been restructuring decisions made, and these are expected to deliver further cost savings of $2 million annualized. There's the merging of the sales functions under one leader, and we welcome Craig Nelson as Chief Revenue Officer in San Francisco. And Craig was previously Opmantec's CEO. We've removed the offshoring of software development for FirstWave, and that's quite significant. So we haven't removed offshoring and hired resources onshore in Australia. We've actually removed that contracting in total as a cost saving. And we're aligning product management and marketing functions. So the Opmantec transaction brings together with it a digital marketing function, and we're finding some good synergies there to streamline product management and marketing together. And we continue to rationalize the number of platforms deployed globally. And again, this diversification of revenues that exists through this acquisition enables us to make some better decisions and rationalize some of these platforms globally. The near-term priorities, number 2, grow faster. I mentioned the annual recurring revenues of 500,000 of new contracts signed in December. That's just from the Opmantec side. So that's going to flow into FirstWave into the next quarter. So Opmantec is going to help the growth. We've signed a contract with Microsoft for secure management of their Internet of Things environment, starting with 20,000 devices, which is a lot, and with the ability to expand further. This is very, very exciting, and we'll be onboarding Microsoft during this quarter at FirstWave. So very significant agreement. It's the first secure management of Internet of Things that FirstWave has had or Opmantec has had. This is a newly launched service for FirstWave with Opmantec IP. It's really cool, and what a client to kickstart it with. We will deliver this quarter the Sci-Precision frictionless email and the mobile reporting. And I'll note that the mobile reporting is not just about mobile devices, it's about giving customers information about how we have protected them so that they know the benefits they're getting from the service. We'll be implementing digital marketing for Sci-Precision. So we'll be taking that digital marketing capability from Opmantec and expanding its reach to grow the uptake of the Sci-Precision services. We're going to do that with partners. So we'll be re-energizing and co-marketing with partners. We'll be launching new services which leverage the Opmantec IP. Some of these are going to be really fast to launch, and some of them are going to take a long time. Like any tech company will be developing and evolving tech for many years to come, but there is some low-hanging fruit there, and we're prioritizing those, and we will be launching some new services quite quickly. We'll be identifying further opportunities for cross-selling. Okay, so we're going through all the Opmantec has 26 service providers, all of which are potential clients for Sci-Precision. And vice versa, there's opportunities to sell Opmantec IP to FirstWave service providers. So we're going through all of those things and looking for the cross-selling opportunities. We're looking to progress the culture and strategy. In particular, of course, the first priority under this category is to complete the operational integration of FirstWave and Opmantec. I'm really, really happy with how that's going. It's going exactly as we planned it in DD, and I guess I have to pass credit to the FirstWave board, the Opmantec board, and both exec teams for having conducted the DD in such a collaborative manner that we came out with plans to integrate these two companies, and everything's going to plan. As we're doing this integration, we do identify some longer term strategic items, and they'll be fed into a strategic plan for the combined company with refined budgets. And that's another plan that we're developing in parallel with this transition. And we'll be transitioning the organization to a sales-led mindset of a high-growth global tech company. Okay, so FirstWave has invested a lot of money in the tech, and this is about everybody in the company understanding that they're all part of generating growth. So if you're in development and you're developing a feature, you'll be asking questions such as, if I develop this feature, how much more am I going to sell? Or how is it going to increase our customer retention? Or how is it going to allow us to get more money from our existing clients? Okay, and that's got to flow throughout the whole organization. We're all got to be behind sales and growth, and that's a mindset shift that we're all going to make together. So in summary, which is the next, I'm all in as CEO, as an invested CEO. The transaction with Opmantec was done in all scrip, and I'm a very large investor, so I'm a very large believer in the future of what's going to happen, and that belief has strengthened since I've been here. I'm also very straightforward and open, as all the existing Opmantec shareholders would know, and I say right now I'm quite happy that the rationale for the acquisition is proving true. The integration of the businesses is going well, and you know, I'm looking forward to giving you all the Q3 update, because from my perspective, it's full steam ahead. So that's kind of my initial views. I've only been here 4 weeks, and on that, I'll hand back to John to wrap up.
Thanks, Danny. I sincerely believe Q2 will go down as a defining quarter for this company. We said during the acquisition briefings that the Opmantec acquisition would be transformative for FirstWave. I believe that then, and I believe it now, and I believe that over time it will be proven to be the case. And I believe you as shareholders should think that you are now invested in a new company, one with a broader product portfolio, one with new channels to market, with the US and Latin America now open for business for FirstWave, one that brings synergies in revenue and expense and the opportunity to make decisions about our future we were not able to make as the old company, one with a stronger and, dare I suggest, more independent board that can now look to add to its quality and capability in an environment of much greater certainty. But more importantly, one with a refreshed and committed executive team, one, as Danny has said, with an invested CEO who shares the aspirations of all shareholders in his hip pocket, but also entirely believes in leading a highly successful company in all aspects. And of course, one with a shared and renewed enthusiasm for the opportunity ahead. You've heard from Danny as your new MD and CEO. You'll make your mind up about him in coming months, but personally, having been working with him for some time and listening to what's important to him and how he goes about things, I'm delighted to hand the leadership role over to Danny. I believe we're all in very good hands. Thanks for listening. Let me now hand over to you for your questions.
Has anybody got any questions? You can either type these in the Q&A or request to actually verbalise your question.
Got a couple of questions coming through the Q&A.
So Max Crozier, are the reasons staff churn planned or business churn? The planned reductions, are there more staff reductions?
Danny, you might comment on that.
Look, there's immediate cost savings from combining the two businesses, and they come from two areas. One is obviously structural reform, which involves the removing of some people from the business. But the other is just the fact that in each of the two companies' plans, we actually don't have to go and hire certain people. And we kind of outlined this in the acquisition briefing. But, you know, for example, you know, John was interim CEO, so there was a vacancy there. Opmantec was looking for a CFO. Opmantec's CTO was moving towards a more customer-facing role. So there's actually quite a lot of natural cost-saving synergies in combining the two organisations. But yes, there's structural reform in removing costs from the business. I saw the Altran, removing the Altran contract as significant, and there have been other people removed from the business.
So if I could just add to that, Danny, just in terms of where I think the question is coming from, the savings in Q1 and Q2, and the savings Danny's mentioned in Q3 are for actual headcount reductions. They're not a crossover synergy of John being interim CEO and now being non-exec director, or Neil leaving and Danny now being CEO. They're actual cost savings in the business. So those other synergies are obviously important to us going forward, but they've been rolled into the cost of the ongoing business.
Yeah,
I think I need to add as well, because I think the question is also getting at what is a key sort of challenge for all companies such as FirstWave, and that is getting or recruiting and retaining the very good talent. There's an absolute war for talent going on. There's no question about that. And globally, the big companies, the Googles, the Microsofts, etc., they're recruiting aggressively, and they're very attractive propositions. So, you know, we are in a fight to recruit and retain our talent. We have certainly lost a couple of people we'd preferred not to have lost. They're not necessarily counting these numbers because they're replaced, but we are in that fight. And, you know, if I look at it factually, I think we're winning that fight from a FirstWave point of view. You know, we've got a lot to offer people. They're working on really, you know, to use Danny's expression, I've never used it before, but it seems to work. You know, they're working on some really cool stuff. You know, we're doing stuff that's really inventive and really creative and really innovative. So there's a great opportunity for people to really advance their own CV and their own knowledge and experience through working at FirstWave, and that's the proposition we put to people. So, you know, summarising all of that, there's certainly been a very small number of people who have left the business of their own decision, but in very large part, it's been at the decision of the company, and through the restructuring and the merging process, that's what we're able to do. And it's very unfortunate. It's not something that we desire, but it's factually the case. You can't have multiple people doing one role, which is exactly what integration happens during integration and mergers. So that's sort of you've got the answer from the three of us. I hope that answers the question.
Nick Harris has a question. Thanks for the call. Q1 for John. FirstWave domestic ARR grew for the first time in many quarters. Can you elaborate on what has changed? Q2 for Danny. What was...
maybe if I just jump in and answer that one better, Danny. Thank you very much for observing that, Nick. And you are absolutely right. There is an uptick. Danny made the observation that, and it was absolutely correct, that, you know, pre-Opmantec, what we'd really been doing was growing international business, because I've said to all of you before that the future value of this company rests in the growth of its international revenues. And I think that's true. However, it's really important to have the relationship with Telstra. We were trying to walk a bit of a fine line there, and, you know, clearly not putting enough investment into the Telstra account, because we needed to get more investment into international activities. And that's just the nature of the business that we're in. But as Danny said, it's totally different with Opmantec on board. They bring $3.5 million of $3.75 million of annualized revenue, which is all international. So now we don't have to fight that fight, and we can look back at Telstra. So we made a decision, I think about 6 months ago, that we needed to reinvest. And before the Opman transaction was completed, we needed to reinvest in Telstra. We bought Oscar is one of our guys who heads up that team now that works with Telstra and works with domestic clients. And it's a long and hard battle to get an organisation like Telstra to change, but we are winning that battle. And, we've got a really good team now working on the Telstra account, and it will be slow, but it will be certain. So your observation about and your question about what's changed, it has changed because we have put the resources and we are making it change. And that's a very, very critical thing, as Danny's mentioned. It's a very good thing to be very strong in your home soil, and Telstra as a customer, we want to be very strong with. Now, that doesn't say we're not trying to diversify or broaden our access to market in Australia. We are. And we've got projects that we're now talking about to other organisations in Australia. So we expect the domestic revenues to grow. We see the Telstra change as being sort of a start of that process. Thanks, Drew.
Okay, question for Danny. Please elaborate on your comments removing offshore software development for FirstWave. Are you now doing this with AU staff or something else?
I think my camera's frozen, has it? I'll try and fix that up. Just give me a second, I'll get my camera fixed.
We can hear you there.
You can hear me okay? Okay, so I'll just talk to it for the moment. So we've reduced the size of the development team, and we've reduced that by removing that offshore supplier in total. That was a nice, clean and easy way to do it. This comes at the end of, at the back end of launching Sci-Precision. So, it's about part of that transition of how now having developed a significant piece of technology and then moving the focus of the investment to generating growth from that intellectual property. That doesn't mean we're not investing in the IP. Of course, there's still a development team, and they're joined by the developers that come from Opman as well. So there's still lots of good R&D that's happening, but that offshore contract has been removed in total as a cost saving.
Question for Ian on Q3. Have all the cash costs on Opman been spent for Q2 or Q3 should be clean?
No, some of it will be in Q3. So as noted in this presentation, there was 500,000 of transaction costs that occurred in Q2. But if you look back to the deal costs, there's brokerage, which won't appear in the P&L in Q2, but would have been netted off in cash. We would have received the net receipts when we raised the 14 million. So that component has been paid, if you like, in Q2, but isn't in the P&L. So that leaves about 3.5 million in costs to be paid in Q3, which have been paid. There's about $500,000 left of $4 million worth of costs. So in January, we paid the majority of those. But when we come to present the Q3 numbers, there will be costs from the Opman Tech deal, and we will have to lay out in the Appendix 4C for Q3 how those costs flowed through. But that's why I gave you the balance at the end of January. The majority of those costs have been paid now, and we're still sitting with a nice cash balance.
This question from Wayne. Can you please explain the Microsoft Internet of Things deal a little bit more? Question for Danny.
Okay, happy to. So Microsoft's an account that Opman secured, might not get it exactly right, but let's say July of this year. And Opman has been trying to grow the account. One of the reasons we undertook the transaction with FirstWave was we were getting some pressure to move into more of the security area, and there's space for these two companies to be together, that's for sure. So what we've signed with Opman with Microsoft is a deal starting with 20,000 IoT devices, where they're going to use a newly released cut down version of what was Opman IP to manage in a very simple, highly scalable manner and a secure manner their Internet of Things devices. So one of the claims to fame of Opmantec technology is that it's claimed to be able to manage anything at any scale. So if you were to invent something today and connect it to a network, the Opmantec software could manage it today, which is now the FirstWave software. We are working with Microsoft to try and move some of these services into the cloud and effectively onto the Sci-Precision Platform. So if we're able to do that, that's obviously going to be even more exciting. But we're already very excited to have them as the first client on this cut down version of IoT management. And that is a technology that we see as sitting in the near term on the Sci-Precision Platform.
Another question from Wayne. What is the global headcount now, please, and how many in sales roles?
The total global headcount will be 100, taking into account everything said in this presentation, but that does include, I think it's 5 headcounts in Mexico, which are where we have a branch office, which are quite low cost resources compared to an Australian headcount. And that also takes into account we've got a number of people that aren't working full time. So the FTE equivalent is 100. Sales will be just under 30, including pre-sales, but we'd also look at the sort of marketing team in being very sales focused. So, you know, there's a number of resources in that team as well that you could classify as sales. So, you know, another 8 people and another 8 FTEs in that team.
Lovely. A question from Max. Who do you see as our main competitors, and what is FirstWave's unique offering outside the Opmantec acquisition?
Maybe if I just make an observation on this first, Danny, then hand over to you. So nothing's changed. So everything we've said before from a Sci-Precision point of view remains the case, and that is that there is no other offering like Sci-Precision in the world. Remembering that Sci-Precision offers integrated perimeter security for the small to medium business, covering email, web, firewall, and endpoint, and also providing advanced detection and response. So there is no other solution like that. So we don't have a direct head-on-head competitor. We do have competitors, obviously, across the different services, but our benefit is that we've got, for our service provider, we've got a platform which allows them to manage all of those diverse services through one pane of glass. And that's a huge advantage for them because it means cost savings. It means operational management costs are much lower. We've built on that proposition very significantly with the release of Sci-Precision on the 27th of whatever it was, November, I think. And we built on that enormously because we provided a whole set of functionality to allow them to bundle much more easily than they have been able to in the past. And also we provided a whole lot more APIs for complete integration into their internal systems so that it becomes a sort of a transparent process for them to take on board our platform, provide it to their end users, and have all of the billing and other sort of functioning that's required behind the scenes to do the accounting. So there is no competitor to that. However, the reality of life is that email is by far the largest of those services in terms of the threat vector, and the organisations who are playing in that area are many and varied. But if we looked at where we see opportunity for what's called competition, which is a combination of cooperation and competition, is in the Microsoft and Google areas who own the email space. So Microsoft, as everyone would know, is putting an enormous amount of money into their product. One aspect of that is improving the security. Microsoft security continues to be very complex for small to medium businesses to implement. What we're doing with frictionless email is providing our Microsoft email users with additional functionality at the flick of a switch that goes into all the things that we provide, particularly advanced detection and response over email, which gives them a whole bunch of opportunities to stop threats before they happen and also to take actions when new threats get through. So we build on the Microsoft platform for security, and we will build on the Google platform across Gmail. And that's in the release of our software in the end of Q3. We'll be addressing the Microsoft area for our frictionless email. And that'll be a huge opportunity for us to work with existing partners who are selling the Microsoft 365 suite, to work with them to provide additional functionality, not over email from a security point of view, but also over the other vectors of web, firewall, and endpoint. So we actually still don't see a competitor. The challenge that we've had is getting our partners to buy into the whole proposition. When you talk to the Telstra, the Telstras and the other telcos that we work with, the partners globally, inevitably we're talking to product people who want to package parts of stuff because that's the way they think. We're trying to re-educate them to package the whole lot. Now we will win that because we're going about it in the way that we're going about it, but it's one of the reasons why it's taken so much time. So we don't have direct competitors. But the market has moved clearly with Microsoft and Gmail and the security that they provide, and we're building on that. So we're very hopeful that that's a good answer for our service provider partners, and it's a great answer for our end user customers. And I think that I've said this before, but I'll repeat it. The mobile reporting that gives the small to medium business end user the second-to-second status of security over their devices is a critical differentiator. That's what we'll be delivering in part 1 at the end of Q3, but that will be an ongoing development project because there are lots and lots of features that we can pack into that. And that's a winner. That's where, as everyone does these days, they look to their mobile phone to find out how things are going. Well, that's what we'll be offering in the release at the end of Q3. Danny, did you want to add to that? From a competitor point of view, you've got the Opman tech.
No, I'll just add. I mean, it was asked specifically about FirstWave, not Opman. Opman has loads of competitors, but majority of Opman revenues come from service providers, which is why this is a good match. I agree with, as John just outlined it, there's not really a competitor for this service provider platform that delivers these security services to their clients. For the clients that are purchasing it, they'd have to go and get a whole bunch of different point systems, and it'd be pretty painful. In the end, for both these companies, the biggest competitor when you're trying to sell is to actually get the client to do something. So that's the competitor. The competitor is that they do nothing. That's the real competitor for Sci-Precision. Yeah. So that's the challenge, getting them to take it up and want to do it. But with everyone working from home now and all this stuff that's happened, I mean, it's just perfect timing for these platforms to be in place.
There's another question regarding the commercial success of Sci-Precision. What work is going on behind the scenes with customers and partners to ensure its adoption? If you've got any further comments on that.
Yeah, maybe if I can speak to that. In the first instance, when we launched Sci-Precision in Q2, we put together a program immediately thereafter to, number one, we launched with partners, but we put in a program to get to all partners and start to build their knowledge and confidence in the offer, in the new offer, start to inform them and start to get it into their planning. That work has been ongoing. It is hard work. It's the job, however. But we started doing that shortly after the launch of Sci-Precision, and we've continued that. We've had, I mentioned earlier, the Q2. I mean, the whole due diligence process, all the things that go on, which engages a whole business, engages our sales leaders, engages our development leaders, because that's how you do due diligence. Was a really significant distraction, and it has pulled us away from making as much progress in this area and in other areas as we'd have desired. But look, I can only say to you, that's understandable, because that's the nature of things with these sorts of things, and we've got limited resources. But the end result is not what you'd ideally like to see. So we are doing what you asked us to do. The question you asked, we are doing that. We have been doing that since the launch of Sci-Precision last quarter, and we will continue to do it. And we'll now, with Q3 coming on, and with the release that will come out at the end of Q3, we're starting the process of talking to our partners about that as well. But inevitably, you need to see the mobile reporting, mobile front end, in order for it to be compelling, and we won't be able to do that until the end of Q3. So, long answer to a very short question. We've been doing a lot of, but the bottom line is we've been doing as much work as we've been able to with the resources we've got in working with our partners to get them familiar with and get them to uptake the service.
Yep. I'll just add that the new company has a variety of products, and as we outlined in the update, there's already $500,000 of annual recurring revenue growth that's in the bag because it was actually sold in December and it's commencing in January. That's just from the Opman side. And as a new CEO, like any new CEO would do, and with our new head of global sales, chief revenue officer in San Francisco, we're doing a full review of the whole pipeline for both companies, and we've been pretty happy with what we're finding. These are long-term projects and investments in some of these partners, and we look forward to monetizing them. There's been a lot of money gone in before I arrived, and I feel like I've arrived at a very fortunate point.
A question maybe for Danny. What's happening with the several international offices, which on the surface appears to contribute little to the business?
Sorry, what's happening to is that the existing FirstWave international offices?
Oh, what's happening with the several international offices? This is a question from Kim.
Yeah. Okay. So, and this kind of gets back to that curly area where the first question was asked, I guess. The transition plan is released internally on Friday, and so we're somewhat restricted right now at what we can run through on this call, especially with staff shareholders and things like that as well. But we're looking at all of that. Some of those offices have long-term leases and things like that, but you've got to do a full review of the pipeline and everything, where the prospects are. It's I think it was Kerry Packer that said, the hard part in business is knowing what to keep investing in and when to pull out. It's when things are going well, to put more money into it. But so which of the things do we keep investing in, and which of the things do we stop investing in? That transition plan is finalised on Friday, and a lot of that decision making comes out of that. But some of those international activities will stop. But it's important for the company that we get to that point where everybody knows, I'm safe and this is continuing to be invested in and all of that. And that point is Friday.
A question from Max. I'm very pleased to see the company will move to a sales-driven organisation. What is the structure? Direct channel, combination, tier one partners, and also he also has an additional question on sales skills.
Yep. For me, John. Yep.
Yeah.
So the initial structure is that neither of the structures that either of the organisations were selling by changes. Nothing changes by virtue of the transaction straight away, but the transition plan does drive some of those changes. What does happen overnight is that there's immediately an international sales structure with paying customers, with referenceable customers. Opman's 26 service providers are now prospects for Sci-Precision, and they're not new clients. They're clients that are already paying us, already profitable, already generating revenue, already have relationships. So that changes things quite significantly. The main change in the sales structure is that it's now led from North America, from San Francisco by Craig, and obviously there's more salespeople and diversified revenues. The path to market for both organisations, for Opman, the majority of revenues comes from service providers. For FirstWave, all revenues come from service providers. So that's still the focus. All these technologies get sold to service providers who then go and leverage it to sell it, often bundled with other things to their clients. So that continues to be the focus on service providers. For the portion of the Opman intellectual property that is sold direct to mostly to large enterprises like Microsoft, that's something we'll continue with. And we're going to start looking at, especially commencing in North America, offering Sci-Precision services direct to large organisations and enterprises as well. We haven't made a decision on that yet, but it looks highly likely that we'll head that direction in North America to start with.
Yeah, so if I can just add to everything that Danny said, we are predominantly We have been and will continue to be predominantly a channel organisation, working with our partners in the channel. Those partners will be service providers, they will be telecommunications companies, and they will be ISPs as they are today. And through the Opman Tech channel, they'll also be managed service providers. So we are primarily a channel company. However, we have a direct-to-market sales capability with the larger organisations, a la Microsoft, that, as Danny said, there's an opportunity to put with that direct team the Sci-Precision portfolio. So Sci-Precision gets to go to market through a direct channel, and Danny was a bit coy about when and if, but most likely. But that's an opportunity, which is an expansion of what we've already got. And Sci-Precision gets to go through the managed service provider channel, particularly in the US, Latin America, which it hasn't had before as well. So the bottom line is it's channel predominantly, some direct, but a much broader engagement with the opportunity.
Lovely. We've got a question now for probably John. This is from Justin Bock, one of our new shareholders. Can the new shareholders please get a commentary around the last 6 months share fluctuation? Is this expected to continue?
Gee, that's a tough question, you know. I should go and ask our brokers. It's really, look, I think through this period until we can demonstrably deliver revenue growth, and we say this internally all the time, but until we can deliver demonstrable revenue growth and then sustainably do that, I think there will be volatility in the share price. You know, many of our shareholders have remained with FirstWave through the whole ride from 2016. It's been a really hellish ride at most times, and you know, I've recommended to them today that we've got a new opportunity to look at this business, and I absolutely believe that. So that's a good thing. So, but I can't guarantee anything in relation to share price fluctuations, other than unless things change, why would the sort of share price trend change? So it's expected to continue until such time as we deliver on what our shareholders are expecting, at which time we would expect there to be some sort of trend form. So I don't know that I can answer any more than that. What you will see is low transaction volumes, though. So that's what causes a lot to do with what causes the ups and downs of the share price.
What we all want. We're all in it together. We want the share price moving north, and you know,
it's our job.
Cost cutting is one side and growth is the other side.
The job's to deliver, and the share price will follow. Price will follow.
Yep. Yeah. So
our focus is on performing.
Yeah. So my focus is on performing, and then also getting the news of that performance out there. Yep. Absolutely. So.
Are there any further questions? Kim's got a question. Any updates on board renewal?
Yeah, what I did say, Kim, during my words was that we're now in a different situation. Number one, we've got a board that's already got more diversification on it and got more capability sitting around the table. I know that at least one and perhaps two of those directors, should there be better people or other people wanting to come up, we could attract to the board, then they would be prepared to step down. Is the board big enough at 5? Probably. I'm not sure we'd want to be for our sort of company much bigger than that. But we're now in a much more certain environment from a cash point of view and an opportunity and all the things we've spoken about in this presentation. We're in a very significantly different position, and we will be looking to bring other talent, other capability onto the board. We'll be looking at making sure that that's diversified, that there's diversity in that. So the bottom line is, yes, we will be doing that. That's a job really for this current half by the end of June.
There's no further questions, John.
Okay, look, thank you everyone, and thank you for your questions. That's been quite a robust conversation. I'm sorry it's only one way. It's one of the legacies we've got, I guess, in this sort of environment. But if you've got any follow-up questions, please don't hesitate to send them through to us. We'll answer them straight away, and we'll make sure shareholders see the answers to those. Thanks very much for this. We're going to get back to work. So good morning to you all, and hope you have a great day. Cheers.